in the U.S., the deficit spending is out of control. And the currency creation, it took 200 years to go from $0 in existence, paper dollars, to 825 billion. And then it took just a few months to go to about 1.75 trillion. In March of 2009, they announced another 1.2 trillion. Now when they do that, that's just printing currency. That's like just running the printing press. There's a blizzard of paper right now. Never before have all the world's currencies been fiat currencies. All that paper throughout history tries to come and land on this same tiny little pile of metal periodically. Right now, gold has begun this accounting again. This time, it's going to be worldwide. This is the greatest opportunity in the history of mankind because this is going to be the greatest wealth transfer in the history of mankind. Throughout history, they start off with a certain amount of money in their society, gold and silver. And they come out with representations of gold and silver, like paper notes or debased coinage, where you're mixing it with copper. And they increase the currency supply. And gold and silver sort of lays dormant. It lays in wait until the public realizes, they start to sense the inflation of prices that are caused by the inflation of the currency supply. And then they rush back toward gold and silver to protect their purchasing power, and in doing so, they bid the price up until it accounts for the currency supply. And that's your opportunity. That's this enormous wealth transfer.
So, Mike, where are we in the gold cycle right now?
I believe at the most we're probably 20% the way there. I think there's a whole lot of purchasing power gains to be made coming up here. If you take a look at my book, Guide to Investing in Gold and Silver, one of the premises here is that throughout the centuries, whenever there's a problem with the currency, whether it's deflation or inflation, people tend to rush back toward gold and silver when the currency becomes unstable. And especially during inflations when there's people see their purchasing power being lost very quickly, they rush back toward gold and silver to protect their purchasing power. But, we don't have hard data before the establishment of the Federal Reserve. Once we have the Federal Reserve, we can see the actual data here. And what happens, the lower line here is the value of all the gold held at the Treasury. That's the total value measured in, so it's the ounces times the price of gold, the dollar price of gold. So that's the entire value. The upper line is the value of all of the base money, which is basically the cash that's in circulation. Base money is paper dollars. It's the cash in circulation plus the deposits that the banks have at the Federal Reserve. Now, all of those deposits are redeemable in cash. So it's basically all paper dollars that exist. And in 1934, gold was allowed to float on the open market, and it rose until it hit 35 bucks an ounce. And in doing so, it covered every paper note printed from George Washington to Roosevelt. Then, if you go to the 1970s bull market, gold became free trading, and the will of the public and the free markets once again bid the price up to where, for an entire year, we could have gone back on the gold standard. Every paper dollar was covered. The value of all the gold at the Treasury exceeded the value of all the paper dollars in circulation. But I'm sure you would agree, credit cards are replacing cash in circulation. Wouldn't you say so?
Absolutely.
Yeah. Okay, what people don't know is that when you sign a credit card, a lot of people don't know this, when you sign a credit card receipt, you're expanding the currency supply of the planet. That currency didn't exist until you signed that receipt and the bank makes a book entry. And so that's called, unpaid credit card balances are called outstanding revolving credit. And so if you go to the Fed's website and you get these numbers and you add outstanding revolving credit to the base money, you'll see that for 3 months, gold also covered base money when it got to about 600 bucks an ounce, and it overshot. It went to 800 bucks an ounce. But the reason that I argue that you have to include outstanding revolving credit in base money is because when you sign that credit card receipt and you create that currency, you pay it to a merchant the same as if you had paid paper dollars. Those dollars stay in circulation until somebody saves them up and pays down credit card debt. So it's really base money. It's that circulating medium that's going through all the checking accounts. And it covered outstanding revolving credit. At the end of the book, so base money plus outstanding revolving credit. At the end of the book, I show the same chart again, but now it's taken out to 2008. And there's that little 1980 blip where gold went to $850 and overshot both base money plus outstanding revolving credit. And you know, gold has been doing this basically for about 2,400 years. Whenever a government expands the currency supply beyond a reasonable amount, people rush back to gold and silver to protect their purchasing power. They bid the price of gold and silver up, measured in that debased currency, until the value of the gold and silver matches the value of the debased currency. Well, look at how we're debasing the currency today. Base money went up to $825 billion. Outstanding revolving credit is way up here. It took, when this book was printed, last August 2008 is when the book came out. It took about $6,300 an ounce for history to repeat and for the value of all the gold at the Treasury to rise to where it would cover base money plus outstanding revolving credit. Then, a month later, in September, they bailed out Fannie Mae and Freddie Mac. And the total bailouts in 2008 came to about $900 billion. So the base money, the checks the Fed wrote, increased base money from $825 to almost it was 1.7 something trillion, almost 1.8 trillion. Then in March, they promised another 1.2 trillion. That'll bring us up to about 3 trillion of base money. And this year, for the first time, outstanding revolving credit exceeded $1 trillion. So it's about 3 trillion would be the total. And that puts, for gold for history to repeat, and gold to cover the same portion of the currency supply that it covered back in 1980 and back in 1934, gold has to go over $15,000 an ounce today. So no, the answer is the cycle has just begun.
In 2010, if growth starts to fade, you're going to see Bernanke really step it up with more quantitative easing.
Right.
I mean, what does that mean for the dollar? What's going on with the euro today? With Greece all of a sudden in, all sorts of trouble. Not one European country is meeting their goal in terms of their deficit. Okay. All these companies, all these countries are just printing money hand over fist. And, the beneficiary of that is gold. Gold has a, I hate to sound cliche-ish, but gold has a 4,000, 5,000, 6,000 year history of being a store of value.
Now, silver. Tell me about silver.
Silver is
What's the silver story? Give me the silver story.
Silver is an extremely interesting metal. I mean, it's also, in addition to being a precious metal, may even have a longer history than gold as a precious metal. And one, obviously, because of its price, it's more easily for the typical investor to accumulate and buy silver coins. It's also a remarkable, and I use that word advisedly, a remarkable industrial metal. Its properties are, totally unique. It's the best electrical conductor in the world, better than copper. It's the best thermal conductor in the world. And because of these unique properties, it finds itself in a lot of things you wouldn't suspect. One of the things you look at is how much you're using relative to how much silver there is in the ground. Right now, that ratio is 10 to 1. That means that
you're using 10 times more silver.
Every year, we've been mining about 1/10 of the reserve base of silver.
Oh my God.
That's scary. That is frightening. That means that we have to increase this resource dramatically, or else we're just going to run out of silver. And so you ask me for prices of silver. If I told you $100 based upon everything that I'm saying right now, I don't think in any way you could call me crazy. I mean, silver, I think, could, barring a collapse in China, which I just don't see, barring another major worldwide catastrophe, I think silver could be an absolute huge, huge winner. There's very little of it, and we need it for everything.